company. Leanne, hello to you. What do you make of the market today?
Dan, certainly seeing that risk-off sentiment continuing after we saw that exactly happening on the market yesterday, seeing a broad-based sell-off across most of those sectors, although that property sector is actually the one that's holding up quite strongly, up close to 1% today. But of course, there is a bit of a lack of corporate news really on the market, and of course, a bit of a lack of economic news as well, providing drivers for the market. So it really has been the weakness that's come across from overseas markets this morning, and potentially weakness across the region, which will actually continue to drive the market at these low levels for the rest of the afternoon. We did see that weak data coming out of the US, the continuing falls in those oil prices, and of course continuing concerns about Greece's future in that Eurozone economy, really continuing to add pressure on overseas markets, and certainly seeing that translating across onto our market today. Not surprisingly, we are seeing that energy sector the worst performer once again. We did see, of course, those oil prices falling off. That US energy index was down about 1.8%, and seeing the energy index on our market down about 2%. So I think we can continue to expect that for the rest of the afternoon. That materials sector is actually also coming under a bit of pressure, but we did see commodities mostly mixed overnight. We saw iron ore up about 1%, and that was the highest level we have seen in about a month or so. And we also did, of course, see gold up, and certainly seeing investors continuing to seek gold as a bit of a safe haven. We did continue to see copper under pressure though, as well as aluminium. So certainly seeing a bit of a mixed performance in that materials sector. It will be interesting to see how volumes fare today. They were fairly strong yesterday. Not sure if we will see the same sort of volumes going through today, but I do expect that we will continue to trade at these low levels for the rest of the afternoon.
And Leanne, any insights into what's driving the property sector this session? It was the best performing sector last year, but do you think it's just investors perhaps moving into lower risk stocks in the wake of the oil price fall?
Dan, potentially the reason why we are seeing some strength there, you are absolutely right. So 2014, the property sector, telcos, as well as the healthcare sector were all the best performers. So really those high yielding sectors and the defensive sectors. And as you say, that is really in response to those falling commodity prices and of course those falling oil prices. So I do certainly think that as a result of those oil prices continuing to fall off, of course commodities continuing to come under pressure, we are continuing to see investors are jumping into some of those high yielding and defensive stocks such as that property sector. So again, a reason why we are seeing a bit of strength there today.
I also wanted to get your insights on NAB's Clydesdale Bank CEO resigning. What type of impact do you expect that to have, particularly on an exit strategy or outlook for overseas?
Dan, we are certainly seeing this coming through at a time, of course we know that that NAB is looking to exit that UK strategy, but I don't think that it's actually going to have much of an impact in terms of that strategy. I do think that that will continue, and certainly in our mind I don't think it's going to have a major impact on our valuation or certainly our outlook for this stock. At their AGM recently in December, they did confirm they are continuing to focus, of course, on their Australian and their New Zealand operations, but of course continuing on focusing to exit that troubled UK business, and I do think that will continue. We have seen them exiting that commercial real estate loan book. It's reduced by about 97% or so since they took it on in about 2012, but I don't believe that this news that's come out today, the CEO resigning, will actually have any impact on that UK strategy continuing. If we have a look at the outlook for the stock, we do remain very positive in terms of it being a bit of a turnaround story. In 2014, NAB actually underperformed a lot of the other major banks as a result of that UK business really being a bit of a drag. So NAB was down about 3.5%, in relation to ANZ down about 0.5%, Westpac up 2.5%, and CBA up a huge 10%. So I do think that that UK exit strategy will continue to support that share price coming into 2015, and we certainly remain very confident in terms of the company maintaining those net interest margins and also that profitable growth. So we certainly remain optimistic in terms of the outlook for 2015, and I don't certainly believe that this news today will have much of an impact, particularly in terms of that UK exit strategy.
It's definitely one to keep a very close eye on. Also today, Leanne, one that you're watching, Crown, continuing to be under pressure this year after a pretty difficult year last year. What's on your radar today?
That's exactly right, Dan. So we are seeing it continuing under pressure. There's been a lot of speculation about the future of Crown, and there are a lot of mixed views out there from analysts at the moment. We actually do remain more on the positive side of things. So as you say, 2013 was actually a strong year. The share price was up about 58%, but 2014 really was a difficult year, down 25%, really in relation to a lot of those Macau gaming revenues, which put pressure on that stock. But on top of that, the Australian economy really slowing down, and of course a weak spending really all added pressure there. So I think the question now is what will in fact happen for 2015. We haven't actually seen it starting all that well. Today we've seen the third consecutive day of losses. So for 2015 so far, the stock is down over 4%. But in our mind, we actually do believe that a lot of that downside risk has been now factored into that share price. We do actually remain positive and do believe that they have an attractive portfolio of assets there, and of course their exposure to that growing Asian demand for wealth certainly is intact. They do have a lot of projects coming on board within the next 2 years or so in order to meet that demand. So we have that Studio City in Macau around mid-2015, the Perth Crown Towers around the end of 2016, and also a new tower at the City of Dreams in Macau in around 2017. So certainly believe as well that the downturn that we did see in those Macau gaming revenues is probably more of a structural reset, and once that reset has actually finished, we will start to see some of that growth returning. So we do actually believe that 2015 will be a stronger year than 2014, and as I said, we actually do remain more on the optimistic side in terms of the outlook.
Leanne Jones live at Bell Direct. Thank you.
Thanks, Dan.